Welcome viewers, welcome to this episode of Budget Discussion. We had Nirmala Sitharaman presenting her last full budget before going into an important general election next year. Today we have with us the Head of Research at ICICI Security, Mr. Pankaj Pandey. Pankaj, your first reaction on the budget?
Hi, good afternoon, Gaurav. So overall, see, the government is following its time-tested template of driving growth through higher capex allocation, and this time within capex, green is the focus, or green is the new focus now. So from that perspective, nothing major drastic changes are happening in the budget, except for the fact that the government has realized that the benefit of driving capex is having a multiplier effect on the economy, both in terms of growth, in terms of job creation. So that is has been the center stage for the entire budget.
Okay, and do you see this the capex announcement that the government has done? It is 3.3% of the GDP this time, about somewhere around 10 lakh crore, which was announced. So, do you see this being a path ahead for more job creation, because we'll have more workforce coming in the near future? So, do you think this will have a positive impact on certain sectors and the economy overall?
Sure. So before I get into that, largely when you sort of look at, I think on the overall budget number front, GDP growth rate has been taken at 11%, GST growth 12%, direct taxes about 10.5%, and capex is something where we have seen a big lift in terms of 37% kind of a growth. Now, within capex, if you look at, usually we used to spend somewhere about 2.8, 2.9% of the GDP as capex. But this time the government has increased to 3.3%. And within that, some of the specific segments, like say, for example, railway has seen one of the highest allocations. In addition to that, road is another segment where we have seen a decent or a good increase. Defense, we have not seen that kind of a quantum increase because the focus is more on indigenization. So obviously, when you sort of indigenize more, the opportunities more is available to domestic players. On top of it, when you sort of look at, government is also sort of forcing states to sort of do more capex, so which is why they are allowing 0.5% of fiscal deficit to states if they are taking a power sector reform. So from that perspective, I think capex has been one of the biggest focus. And like I said, this budget is all about sort of focusing more on the green side. So obviously, you have 19,700 crores provided for green hydrogen. Then there's a big project in Ladakh of 27,000 odd crores, so which is what has gotten approval. And government is looking to sort of use a lot of this bio waste. So they are looking at setting up 200 biogas plants with an overall investment of 10,000 odd crores. Now, typical sector beneficiaries are obviously cement and steel, because they usually toe the line of GDP growth rate a bit higher than that. But besides that, I think infra and capital goods and banks are one of the biggest beneficiary of this entire drive by capex, especially from the government.
So, any particular script or something that ICICI's research team is looking for, or any sector specific that you would say, cement and infra that you have told? Anything else apart from that?
So within when you sort of look at say infrastructure, you have various segments. So you have right from capital goods players like say Siemens, ABB, to something like Thermax, which is a play on overall green capex. And then you have beneficiaries on the EPC side. So you'll have road companies, say something like KNR or PNC Infra benefiting. Also, obviously, L&T it will be a big beneficiary of capex across various segments. So besides L&T, you'll have T&D players like KC International to sort of benefit. And along with that, even the EPC players, generic EPC players like say NCC also are expected to be a beneficiary of that.
Okay, and like every year we have this event, and there are long-term players who are long-term investors. So, talking from a long-term investor's perspective, do you see that this event of a budget matters to them, or they should be more focused on the fundamentals or something of a company if they are invested in certain script?
So I think from a policy perspective, it is extremely important that the budget does not cause volatility. So over a period of time, if people notice, the volatility in the budget has been sort of subsiding. largely because we have got a stable tax regime, especially on the indirect taxes side. So you have GST, where the rates are sort of prescribed, and whenever the meeting happens, so you really don't have to wait for the budget for big changes to happen. Now, on the direct tax side, also, if you look at corporate tax has been sort of rationalized. Now, for the personal income tax, now the government is looking to sort of drive more towards simplification. So there also, if you look at, the government is looking to sort of push the new tax regime, which will have lesser exemptions and lesser complications for individuals. So, from that perspective, overall budget as an exercise probably is not going to have that kind of impact, and will have less, or is sort of becoming a more of a non-event for markets overall. Now, from a stock or from an overall sectoral perspective, while yes, the government focus on a particular sector or the way they are sort of driving the economy is very important. But I think besides that, there are a number of other factors in play, especially the fundamentals of a company, the kind of sector it operates, the kind of margins and the kind of growth it can deliver, and at what valuation it sort of trades. So budget is obviously a component, but not a big component anymore, the way it used to be happened, or the way it used to be there earlier. So from that perspective, budget is becoming a slightly non-event for markets.
Okay. So let's talk about the markets. Today we had a very volatile day because we went all the way to 17,900, touched 17,400 something, and right now we are somewhere around 17,600. So any levels or something that you have in mind for Nifty, and any targets going ahead for Nifty for this year or something?
So I think short term, if you look at, our sense is that probably 17,300 or 17,500 is what will act as a support for the markets. And markets have been sort of been consolidating for more than 6 weeks. And I think not only budget, we have Fed policy meeting tomorrow. So obviously consequences of that will have implications in our domestic market as well. But our sense is that all these policy uncertainties, especially related to higher inflation and higher interest rates, should subside in the second half. And which is why we believe that the overall double-digit growth in top line and bottom line will sort of play out. And which is why we feel that overall Nifty should deliver double-digit returns from current levels. Our target for Nifty is 21,000. So from that perspective, our sense is that second half is going to be a lot more better when a lot of these noises will sort of subside. So second half looks a lot better than what we are seeing currently now.
Okay. I'll ask you one question, because there's this stock called ITC, which usually got the hammering of extra taxation in the initial stages of the Modi government. And then past 2-3 years, we did not see any increase in the taxation on that sector. But today, a 16% increase in tax was announced on tobacco or sin products, if you see it. So do you see any impact on this stock going ahead, or you see?
So I think two things. One is over a period of time, we are not seeing that kind of a bigger increase in tax rates for cigarettes, because that is becoming counterproductive for the government also, because it does not improve their revenues with the similar proportion. Now, with today's announcement, our sense is that probably the tax on cigarette might increase by, say, 7 paisa. So eventually it will require a price hike of 1 to 3%, which according to us is sort of negligible. And for cigarette companies, I think the 10 rupee price category is doing a lot more better, especially for ITC. So which is why we are not too much disturbed with the increase announced in the budget, because you have multiple layers of taxes. So what is increased is only a portion of it. I think the bigger negative is slightly even for insurance companies, because what the government has done is that the government has lifted the tax exemption on traditional insurance policies, where individuals, if they're paying a premium of over 5 lakh. So what happens that this is going to sort of mute the demand for high value traditional policies, which is typically bought by HNIs. And which is why it has got negative implications for the insurance companies. I mean, you'll see most of the stocks down in, say, good high single digits. And obviously, if banks are holding companies for some of these companies, so even banks will also have implications. So from that perspective, the budget is has got some negative surprises for some sectors.
Yeah, absolutely, because all the insurance companies are down, and what you have mentioned. So, Pankaj, if we sum it up, I think the capex is one of the main talking points of this budget. Green energy, clean energy, and sustainability is another one. And talking about, there's been our FM was talking more on digital side. She has mentioned digital word 35 times in her speech. So, I think going ahead, she is putting a path for a digital economy as well, because there have been some announcements on that path as well. I think for first cut, this was a perfect reaction. I won't let you go, because if you can just, if the viewers were watching, if you can say 2 sectors to focus on, if somebody has to, for this year, that would be from your end. Apart from infra is one which you have told.
So I think there is another sector which can be looked at as auto, because what the government has done is that if you're sort of doing a capex of say 10 lakh crores, obviously that also implies that there will be a demand for medium and heavy commercial vehicles. And so definitely it is positive for Tata Motors and Ashok Leyland. And I think when the government has given more disposable income by tweaking the new tax regime, and our sense is that for a taxpayer or for a person with an income of say 15.5 lakh, I think the saving is to the tune of about 52,000 odd. So obviously it is even positive for the four-wheeler players, so be it Maruti, be it M&M, because I think a lot of digital government is looking to sort of focus more on agri startups to sort of deliver a lot more efficiency. So M&M also is sort of a beneficiary of this farm mechanization which can happen. And along with that, yes, if you have a higher disposable income, it is beneficiary for autos and also beneficial for consumer durables. I think consumer durables as a sector has been sort of beaten down a lot. So from that perspective, I think something like Havells, Bajaj Electricals, or V-Guard, so they could also benefit from this entire higher disposable income.
Okay. So thank you, Pankaj, for joining us and giving us your first take on the budget. And the sectors that Pankaj has been focusing on are automobiles and the agri side, and also on the infra and consumer durables are the ones that you can look at, viewers. Thank you for being a part of this, Pankaj. Thank you.
Thank you, Gaurav.